I have Cern Basher here, and Cern is going to be looking in the rear view mirror. But before we get to the rear view mirror, I'd like to just take a look because this will be going up immediately after we finish. And I just was curious to see, we still have Tesla this morning up over $7 in what is now an up market, but which earlier was a down market. Cern, are you shocked that Tesla is up this morning after the big blowout yesterday?
Nothing shocks me anymore, Randy. I've been in this business for 30 years. I have seen it all. Nothing shocks me.
You must have started when you were 11.
That's right. That's right. I think I was still in diapers actually when I started.
I started trading when I was 20. So I have been at it for a few years too, but I haven't done anything on the level you've done. So, okay, so you're not shocked. There was quite a bit of good news this morning for Tesla. I reported on this morning earlier, so we don't need to repeat that. But we've also had this kind of a trend where after the earnings call, we get this down day. And then a day or two later after that, we get a positive bounce. Do you think that's what's going on? Do you think it's the news? Do you have a clue, and do you care?
I have a clue and I have a theory. The clue and the theory might be right, might be wrong. But I am more excited now about Tesla than I have ever been in my entire existence. And I'd like to share with you why.
That'll be a good thing. Let's do it.
All right.
Share your screen and then you can share your thinking.
Sounds good. So here we go. So I don't want to rehash the financial results.
Okay.
Sorry, just getting underway here. Okay. Here are the financial results for those that haven't seen them. This is summarized by AJ. Record revenue, just by a smidge. Free cash flow of 1.3 billion. Margins overall, if you don't exclude stuff, pretty decent.
Yep.
Sure, we can nitpick, and people have, and that conversation's been had.
Right.
I thought this was a great cartoon. The CEO is on the phone saying, we're beating expectations. And unfortunately, expectations is some guy on the ground who's being beaten.
To death.
Well, yeah, at least he's,
an inch of his death.
There may be a hospital visit in his future. This is funny, but I share this for a reason. One is no company has ever been successful over a long period of time by beating expectations every quarter.
Right.
It is not possible.
Right.
Okay, so the whole idea of beating expectations is an artificial thing. In the long run, it doesn't matter.
Right.
Okay. Now, in the long run, obviously you would beat expectations at various points in time, but not every quarter. The world does not work that way. Okay.
We have an interesting thing too with the Tesla community. There is no stock, no company that has ever been as closely watched by so many. I mean, we not only have the regular pundits and analysts out there from the big firms, but we have dozens and dozens of sort of experts like you and me. No, you're actually an expert. I'm a sort of expert with manufacturing background and whatnot. So we come in and we tear these numbers apart 15 ways from Christmas. Nobody else, no other company has this. So when we go into earnings, the expectations are a combination of the street, the retail crowd, the YouTube experts, et cetera. So it creates kind of maybe a higher level of expectation that might pop around other companies that are really basing a lot of the expectations on the previous earnings call, a commentary.
Yeah, I think that's right. We also have investors with different motivations and different time frames.
Yeah.
Right. We have very long-term minded investors who have bought and held the stock for a long, long time and plan to. And at the other end of the spectrum, we have people that are day trading the stock and playing in the options market.
Right.
So the earnings report matters for a lot of people because their strategies are very short-term focused.
Right. Right.
Okay. For other people with longer time frames, the earnings report is a very different thing.
Uh-huh.
From my perspective, this was one of the more important things that Elon said on the call. And he said this before, but he's not mincing words here. right? The value of Tesla overwhelmingly is autonomy. These other things are noise relative to autonomy. And he kind of said this after he got a little bit frustrated, I think, with a lot of analyst questions about some very short-term things. You know, and he goes on to say, if you don't believe that Tesla will solve autonomy, don't hold the stock. You shouldn't own it.
Yeah.
Right. And this is a good message. I think there are a lot of long-term Tesla shareholders or Tesla believers that don't fully believe that Tesla will solve autonomy. But that's not really, those folks really are not the problem, right? It's more of the short-term oriented analysts and traders that aren't focused on that, because there are no autonomy numbers that they can look at to drive the stock price.
And Cern,
Right.
yeah, and Cern, we got to, I've said this 100 times on this channel, but I'm going to say it again. The all-time high was a bet on autonomy. I'm sorry. That's what was happening when we went to the all-time high. It was the first time, or one of the first times, that Elon said, we're just months away. We think we've got it. It's going to happen. And that's where the stock went crazy, because Elon has such an amazing track record with all of the companies he's ever started. And so you took a great base, 50% per year growth. And on top of that, you're going to add these robo-taxis that are going to just change everything. Well, it's not shocking that in order to get back to all-time highs, the retail investor and the street has to get back in alignment on the fact that we're pretty close to autonomy.
Yeah. So let's talk about that a little bit more. So I would say you don't have to listen to Elon. How about Jensen at NVIDIA? Here's a quote from him. Everything that moves will be autonomous someday, whether partially or fully. Breakthroughs in AI have made all kinds of robots possible. We are working with companies around the world to build these amazing machines. Everything that moves, Randy, will be autonomous.
Yes, yes.
That's the world that we're heading to. And we don't actually have to look very far. There are already companies operating today with autonomous vehicles.
Yes, several.
Several. Here's Waymo, for example. Now, Waymo has a very different approach than Tesla. But for those that are in the camp saying, oh, I don't know if autonomy will ever be solved, that's ridiculous. We have autonomy today. We have autonomous systems today.
Right.
It's just a matter of, can a generalized approach that Tesla is pursuing, when will that be solved, not if.
Right.
Waymo has an approach that allows them to run autonomous vehicles today, but it's not scalable. Different approaches, but autonomy is coming, right? So that's the first key point, in my opinion.
Sure.
Let me ask you this. When you look at this chart, what do you see? The chart, by the way, is labeled Tesla, cumulative quarterly deliveries, number of vehicles.
Yeah.
Okay. Besides the obvious, Randy, what is this a picture of?
Success.
Okay.
An algorithmic curve.
Okay. Yeah, it's a beautiful curve.
Okay.
And the number is over 6 million.
Yeah.
It's an installed base.
Right.
And you know what will happen with this installed base? With a software update, the vast majority of these vehicles will become autonomous ready.
Right.
We have never seen anything like this potential in the history of the planet. This has never existed before. We've never had a company put 6 million of something into the world.
Right.
And with a software update, make them autonomous.
Nothing like it. Nothing even remotely close to it.
Right.
Did you
and
see?
even for those of us that have studied this and think we understand this, we barely do.
Right.
The change from this is going to be so profound, we can't overstate it. Now, it may take time. It's not going to happen tomorrow, but the change will be profound. And so the way I think about this is kind of like a razor and razor blade model. Tesla right now sells razor blades. They sell vehicles. They make a little bit of profit.
Razors.
I'm sorry, razors. Thank you.
Yeah. Mm-hmm.
They sell the razor, the car. They make a little bit of profit. In a razor blade business model, you could sell the razor actually at cost, and that would be fine. Right? And this is, you know, a lot of the auto analysts look at this Tesla's declining auto margins or weak auto margins and say, oh my gosh, this is terrible. But when you look at it through this razor blade model, it's perfectly fine to sell the razor for very little profit. Because what you're really trying to position yourself for is that future profit from all the razor blades, in this case, the autonomous software. Okay.
Absolutely.
And this is just, I'll just leave this on the screen. We don't need to talk about all this, but there's a lot written about this razor blade model.
Mm-hmm.
Right? And examples are printer manufacturers offering inexpensive printers and profiting from the sale of the ink cartridges.
Sure.
Or game consoles, and then you get the revenue from the game sales. Right? So there's lots of businesses, not just the razor blade companies, but other businesses that follow this kind of model.
Mm-hmm. Yeah.
And in my view, the autonomous vehicle is very much like this. Okay. It has a similar lock-in effect as well. Elon said on the call, you can't put your Tesla in somebody else's autonomous network.
Right.
So this is what's coming. And I think any analyst on Wall Street understands the economics of this type of model. This is not a mystery to anybody.
Right.
Right. Now, maybe auto analysts don't. Right. And I'll just flip here to the next screen. We don't need to talk about all these details, but if folks are interested, they can just pause and look at this. But this is what's coming. Now, it's a little different because basically what we're doing is with a software update, we're turning a depreciating car that sits there into an autonomous robot on wheels. Now, every movie version of this is scary. And this is from Amazon Prime. There's some show called, or a movie called Robot Awakening. Get ready for an upgrade, right? It looks pretty scary.
Yeah.
Right. And we've been conditioned to think that, oh, when you turn the robots on, all of a sudden you've got this dystopian world. It couldn't be further from the truth. Okay. So we are getting closer and closer to that point. I don't know when that is. I don't make predictions about these things, but we're getting closer to it.
Now, sir, I don't know if you're going to cover this, but this morning, I'm sorry, Warren Redlick did a poll where he asked the question, will you put your will you put your Tesla out as a robotaxi once it's available? And I was shocked that roughly 60% of the people said they would. I know that if we only had the Model Y, we were not planning to. But now that we're going to get the Cybertruck, our plan is to keep the Model Y and put that one out 100% of the time as a robotaxi. But it was interesting to see that high of a number. But I was thinking, even if it's half that, you have maybe 200 million cars in the US by the time this happens. 30% of that would be 60,000 cars. I'm sorry, 600,000. We just said 2 million. Yeah, 600,000. It was such a big number that it shocked me for a minute. So you could have 600,000 robotaxis overnight in the US if it was half of what the poll suggested.
Well, we're aware of the sharing economy.
Yeah.
That's a term that's been out there. Airbnb has done fabulously well. So it shouldn't really be much of a surprise to us that people will act in their economic interests.
Yeah.
Right? If there's an opportunity to make back your car payment or even to make money on your vehicle, most people will jump at the opportunity.
And there's a significant difference between this and Airbnb. I've done Airbnb and I've done Turo. With Airbnb, you're using some of your house, or you're using something that can be destroyed, can be messed up by partygoers and whatnot. Yeah, you've got the review system to kind of keep that in check. But with a car, and I've done Turo, my cars didn't hardly there's a little extra scratching and whatnot, but not really very much. So letting your car out to somebody as a taxi is not anything nearly the same as inviting folks into your home as a guest.
Well, and furthermore, when you use Turo, the other person's actually driving the vehicle. So they could damage it, and they could drive it in a way that you may think is not a smart way to drive your vehicle.
Right.
Heavy on the brakes, rapid acceleration, going fast around the corners and wearing out the tires, etc. With a robotaxi, the vehicle is going to drive itself.
Right.
So should be in a very controlled, safe, low wear and tear kind of manner.
Yeah.
Right. It's just the issue of cleaning the vehicle.
Yeah.
But in my view, that's not a big deal.
Right. Right.
You've got a camera in the cabin monitoring things. I'm sure there'll be a way to look at the vehicles afterwards, or the person getting into the car, the car for the next ride will report if there's a problem. You know exactly who caused the problem. Right. And so the remedies, I think, will be pretty swift. Right.
Mm-hmm.
So I wrote this yesterday. Tesla ignored all. Tesla reports record regulatory credits. The response from Wall Street is ignore them. They'll go away one day. Tesla reports record energy revenue. It's too small to matter. Tesla's a car company. Tesla reports they're building capacity in existing factories to make 3 million vehicles. But the response is last quarter's gross margin decline and competition's coming. You can add probably 20 other retorts. Elon tells us that robotaxi, will take the valuation to some crazy number, right? And he cites ARK Invest's $5 trillion valuation. The response is, ignore it. Everyone will have autonomous vehicles. Okay. Elon tells us that humanoid bots will see a valuation several times higher than ARK's $5 trillion valuation. The response on bots is, you're dreaming. Humanoid bots will never work. Ignore it. They want to ignore everything.
Yeah.
Now, maybe the same people want to ignore everything, but line after line, ignore it, ignore it, ignore it.
Mm-hmm.
Right. And what I think is actually kind of funny is the very thing that Wall Street auto analysts care about, the auto business, is going to be made irrelevant by the things they care the least about: energy, robotaxi, and bots. And so much so that one day, potentially, Tesla may stop selling vehicles, right? Or just build them for their own fleet.
Right.
So the thing that the Wall Street analysts track and care about one day could just completely go away. That's what they're telling everybody to focus on, is the auto business, because today it's a car company, but ultimately that business is history, or it will matter so little. It'll be like books to Amazon today.
Right.
Still sell books. That does not drive Amazon's business success. Tesla may still sell vehicles one day, but it will not drive their success long term.
Right.
So wouldn't that be ironic, right?
That would be.
And as Elon says, the most ironic outcome is the most likely. So just keep that in mind. When you're hearing these auto analysts focus so much on the auto business, we know what's coming. Don't know when, but we know what's coming.
Yeah, we've pointed out on this channel that the energy statements that were made, the energy storage of triple from the 2 facilities instead of double, that alone is 300,000 cars additional. If it was cars, and
you and I discussed this. I think it was on the last show. Again, I put it up for everybody just to remind everybody this is the prize when you go from selling products, whether it's cars or energy storage units. And by the way, Randy, I updated this to take into account that the storage unit lasts for 20 years and not 5.
Okay.
So it's actually, on a comparable basis versus auto is about 3 times more attractive.
Okay. All right. Mm-hmm.
That's great. But we're going then to a recurring revenue business of robotaxis and humanoid bots, and those are multiples of the opportunity that we see in vehicles.
Right.
Now, maybe my numbers are off by, in the bot's case, off by a factor of 10. Fine. I'll give you that. Right? If it's 90 times more attractive than selling a car, that is an amazing business opportunity.
Right.
Doesn't have to be 900 times.
Right.
But as we talked about, this number is pretty conservative here.
Right. Clearly.
So I don't know that I'm far off, but I'll give you a factor of 10 if you want to take it. That's fine. So, okay. Tesla is investing for this future that we've just talked about. Does this look like a company to you that is struggling?
No, this is
a chart, by the way, for those that can't see it, is the cumulative capital expenditure since Tesla's inception.
Yeah.
They have now spent almost $45 billion on capex.
Right.
Capex is investments in the company's future, right? Building plants, buying equipment, etc.
Right.
Now, if you look at this chart, you can see that there's little pauses and dips in it. Not so much a dip, but just a slowing of the growth.
Right.
But I would say over the last 4 years, pretty solid uptick and continuing so.
And
right?
and this chart, you say, oh, 45 billion, that, there's companies that are spending that per year on capex. But then you can look at the return on invested credit, investment credit. And Tesla has one of the highest in the world, and that's taking into consideration it's kind of a startup. If Tesla in another 10 years, probably maybe even less, Tesla will have by far the highest return on invested credit of any company, maybe historically.
Invested capital, yeah. It's not so much for me the absolute number, it's the trajectory of it.
Right.
Right. And the message that the company is sending. If this company was in trouble in any way, they would not be spending as heavily as they are on capex.
Right.
Right. This is R&D. Okay, capex and R&D kind of go hand in hand. R&D is expensed on the income statement each quarter. Capex is capitalized, but cumulative R&D now is about $20 billion. Right, and you put the two together, capex plus R&D since inception, you're over 60 billion of cumulative investment on R&D and capex.
Yeah.
Right. So again, this is not a picture of a company that is struggling. So when analysts talk about, oh my gosh, auto margins are down a little bit, you're missing the point. Right. Okay. Also, here's a chart of their cumulative operating cash flow. Is this a chart of a company that's doing poorly?
Yeah.
Right. And there's quarters in here that are weak.
Yeah.
Sure. But the company now has made more than $50 billion of operating cash flow since inception. Right? Starting from nothing.
Going negative.
Okay? Yeah. Okay. And then this is free cash flow. So operating cash flow less some other things, including capex, gets you to free cash flow. So they have been able to make money and fund their business expansion and still have money left over. There are not many companies in the world that actually can do that.
And as a result, of course, they have 30 billion in the bank with no debt.
Yeah. Right. So again, here there are some, there's some dips and some valleys, and early on in a company's life cycle, it's hard to have free cash flow, really hard. And then Tesla turned the corner and have made quite a bit of cash since. And there'll be quarters here and there where it's flat or down. That's to be expected. That is perfectly normal. Okay. Perfectly normal. All right. Let's go to one of my favorite topics. This is regulatory credits.
Okay.
Wall Street loves to exclude these because
Yeah.
they say that they're going to go away.
Yeah.
And I agree with them. It will go away one day.
One day.
It'll go away when either of two things happen. When the laws and the regulations that have created this environment are revoked. That's possible. Okay, it's possible.
Mm-hmm.
Or when the OEMs that buy the red credits no longer need to buy them because they make enough zero emission vehicles. That seems less likely because a lot of them are pulling back.
Right.
Okay. And you can see here, I mean, the red credit, pretty solid. Right. Now, this 890 this quarter, that doesn't necessarily mean we're going to see that kind of number next quarter. You can see, you know, a few years ago, there was 679 million this one quarter, and then it went back down again to a little bit lower numbers.
But we don't really see the US companies ramping up. If anything, they're pulling back. So
yeah. Yeah. So we'll see how this plays out. So the way I look at this is, okay, exclude it if you want. Take it out of the financials, fine. But what's really happening here? Well, go back to our capex discussion. Every quarter, Tesla is spending money on capex. Why don't we look at it and say, well, the red credits are funding a part of Tesla's capex, the blue. So that's competitor funded, and then Tesla is funding the rest. And you can see over time, the blue part is actually a pretty significant chunk.
Yeah.
And in fact, since Q3 of 2018, competitors have funded about 27% of Tesla's capex.
Wow.
Almost $9 billion. That's a gigafactory or two.
Yes.
How many businesses do you know of that have the competition pay for you to expand your business to compete against them?
Not many.
Not many.
Not any, maybe not any.
Not any that I know of. Right? That's a pretty unique position to be in. Okay?
Yep.
Here's another way to look at it. Courtesy of AJ, he summarized from Tesla's financials that Tesla's total cumulative spend on AI infrastructure is 2.5 billion.
Okay.
Okay. And Tesla's cumulative spend on computer equipment, hardware and software is another 2.6 billion. The blue and the gray bars here in this.
Okay.
Okay. And you can see other capex, you know, machinery, equipment, office furniture, leasehold improvements, tooling, land and buildings, construction in progress, make up the rest. But if you take a look at those two, and I summarized it on this chart, the total spend on what I'm calling compute, which is not really maybe the way to describe compute, but I'm just using that simple word to describe the combination of their spend on computer equipment and AI infrastructure,
right?
5.1 billion since inception of the company. The red credits that Tesla has received just in the last 3 years,
oh my,
not since inception, 3 years, is almost 5.5 billion. So you could conclude that Tesla's competition has funded Tesla's entire compute spend. So think about this, Randy, what this means for a second. Your competition is giving you money that you are investing in software to make your vehicles autonomous. When you are successful with this project, that software is going to accelerate the demise of the competition.
Well,
just 1 second, unless they decide to license the very software that they have paid for.
Where's that quote on irony again?
That's right. So that's just a couple different ways of looking at the red credits. To me, tremendously useful, however you want to allocate it, to capex or to compute spend.
Right.
Pick your poison, but don't just ignore it.
No, indeed.
That money was put to good use, trust me. Okay. All right. I love this photo of Optimus doing some work.
Yeah.
All right, let's shift to energy. Energy, no doubt, was a bright spot.
Yes.
Okay. And the cumulative storage deployed is now approaching 45 gigawatts. Gigawatt hours, thank you. And the chart here, 45,000 megawatt hours. Okay. All right. The energy business is a difficult one to wrap our minds around from a financial standpoint because of the way it's reported. The green bars are the reported revenue in Tesla's energy business. And I've looked at a trailing 12-month look here. So every quarter, what's the trailing 12-month revenue? And so last quarter, it was 7.6 billion. Okay. And you compare that to Q2 of 2023, it was 5.5 billion. So pretty healthy increase. Okay. But there's something that I'm calling indicative revenue, and I'll explain what that means in a minute. That's actually up a lot more. Indicative revenue a year ago, the trailing 12 months was 6.6 billion, and now it's almost 13. Okay. What's the difference in these two? Well, Tesla Energy collects deferred revenue. The easiest way to think about this is on the auto side, FSD. And when somebody buys FSD, because FSD isn't complete yet, Tesla doesn't book all the revenue. Some of that money goes into deferred revenue. Same thing with the energy storage business. They collect money up front. They haven't delivered the product yet, or everything that they've promised goes into deferred revenue. There's also what's called unsatisfied performance obligations. An easy way to think about this is the Megapack has a 20-year warranty, 20-year life. It may not be a warranty for the whole period, but there's a warranty attached to it. There's a maintenance agreement attached to it. There are performance obligations that Tesla will have over the life of this product. So they are showing that this performance obligation number is growing over time.
Right.
And the cumulative balance of deferred revenue and the unsatisfied performance obligations is now over $7 billion. So my number on this page kind of treats the changes in deferred revenue and the unsatisfied performance obligations. And I'm just kind of saying, okay, let's reflect those changes in the quarterly number. And what would it be if we got to book everything now?
Yeah.
Okay. So it's not a GAAP accounting method. I'm taking a shortcut just to kind of look at the changes in the business. If they could report everything all at once, which they can't, what would it look like? And as long as this gap is growing, then the health of the energy business is getting stronger.
Yeah.
Okay. And this gap is growing materially. We may get to the point where this indicative revenue is double the reported revenue. Right. So this is something that I and Larry and others are keeping an eye on.
Right.
The jury is still out, in my opinion, about the ultimate profitability of Tesla Energy. But there is no doubt that this business is a powerhouse in the making, pun intended.
And the 10Q that was out this morning was showing that this is getting very close to $1 billion per quarter of realizable amounts.
Yeah. So let's skip ahead here.
Okay, I'm sorry. Okay.
It's actually they expect, this is from the 10Q that they put out yesterday.
Okay.
That over the next 12 months, that of the unsatisfied performance obligations, of which is a $5.7 billion balance,
Right.
$2.5 billion of that will be recognized in the next 12 months.
Right.
1 quarter ago, their estimate for the next 12 months was 1 billion.
Wow.
This number increased by 1.5 billion in just 3 months.
Yeah.
Okay. Now, I wish the company gave us a bit more information on all this.
Right.
Maybe one day they will. Okay. The deferred revenue balance is 1.5 billion, and they don't tell us how much they think they'll recognize in the next 12 months. Okay. Now, down here where I sort of got, pre-tax numbers per share,
Mhm.
deferred revenue has cost associated with it. Absolutely, it does. The unsatisfied performance obligations may not have a whole lot of cost associated with it.
Correct.
So I'm taking the liberty here to say that it has none.
Mhm.
And if that's true, over the next 12 months, you're looking at 73 cents pre-tax per
Yeah.
share.
Yeah.
Now, companies don't report pre-tax earnings per share, so I should have really taken the tax off of this, but maybe it's 50 cents,
Mhm.
60 cents, something like that. Now, the $2 for the balance is if they were able to book everything all at once right now, it could be as much as $2 pre-tax per share. Now, this number is wrong because, again, I don't factor in costs for the deferred revenue. There
Sure.
are some costs,
Sure.
and I don't factor in taxes. So this number is, maybe it's only $1, $1.30 or something like that. Okay. Don't focus too much on these numbers. I put that in there for interest. It turned out to be more problem than it was worth. But the sheer magnitude of the balance of the two is becoming a big number.
Sure. And that's not even to talk about the big number that is the increase in dollars of sales and profits from the original sale.
That's right. That's right. So the energy business is, it has its own complications. The auto business is complicated too with leasing and different things. The energy business has some different complications, and we're still trying to wrap our minds around what this business really looks like.
Mhm.
But pick the line, the green one or the yellow one, doesn't matter. We're headed in the right way.
Yes, big numbers, huge.
Yep. Okay. First megapack installation coming in France, I believe, 200 megawatt hour facility that was announced.
Right?
That's great. Maybe we'll need to see a mega factory in Europe at some point.
Mhm.
Okay. AJ pointed out something interesting here with warranty costs.
Mhm.
Now, when Tesla sells a vehicle, they have to reserve some amount of money for warranty claims, right? There might be something wrong with the vehicle. We saw with the Cybertrucks, for example, they had to recall a whole bunch of them to replace, what was the accelerator pedal or something like
Yes,
that.
on the pedal. Mhm.
So there's going to be costs. Every automaker does it. Tesla's warranty claims as a percent of its revenue in recent quarters has been going up. 2.3, 2.4, 2.5, 2.6, and now 2.8% of its revenue.
Okay.
Now, this could be a sign of two things. One is Tesla's being extremely conservative and reserving more, and or it could be a combination of the two things. As energy gets bigger, the warranty provision for Megapack could be a lot bigger than the warranty provision for vehicles,
Huh. Okay. Yeah.
right? Because the Megapack is going to be around for 20 years.
Sure.
Don't know exactly how long the warranty on the Megapack is, but there could be some longer term warranty. So that maybe they're being more conservative.
Mm-hmm.
It might also be reflective of, well, a new vehicle like Cybertruck is going to have more warranty claims because they just haven't ironed everything out yet.
Right.
Stuff like that. Now, what is interesting though, in addition to this, is the warranty cost is actually has kind of leveled off.
Right.
Now, it will go up over time as Tesla sells more vehicles and more
Sure.
Megapacks. The total warranty costs in dollars will go up. But this is why I think that Tesla may be treating this in a very conservative way. They're potentially reserving a lot more than they really need to.
Mm-hmm. Mm-hmm.
Now, that remains to be seen. But what it does is it hurts earnings in the short term. And maybe there's a pickup on that at some later point, years down the road,
Sure.
where they suddenly look at it and they say, well, we reserved a whole bunch of money for year 2024 models that we never spent,
Mm-hmm.
and we're gonna take that back.
Yeah. Mm-hmm.
So this is also kind of an arcane thing on the income statements and balance sheet and so on that you can look at to see how conservative is Tesla's accounting?
Just help me out here on the warranty reserve for the energy storage, though. If they haven't collected the money, they wouldn't show the cost of the expected warranty in the future. So I think that was not maybe an impact yet.
Well, if you recall, though, energy revenues went up about 100%.
So it could be the 12 months. The 12 months of cost would be in there. Okay.
Yeah.
Okay.
So yeah, as energy becomes a bigger part of the business, the percent of revenue for the warranty claim on that part of the business might be higher.
Right.
Therefore, it's dragging the whole amount up.
Right. Okay.
And or they're reserving more on the vehicles too.
Right.
Okay.
Mm-hmm. Okay. Yeah. No, this is something that Warren Redlick has been talking about for years. Is Warren? No, that's Larry Goldberg. He's been playing on this. Yeah, for years and years. Yep.
Okay. Elon tweeted this picture out of the dojo system just before the earnings call.
Uh-huh.
That might have been missed. Not the prettiest picture in the world, but it's nice to see dojo systems, live.
Well, it's pretty compared to a lot of racks I've seen.
Yeah. Yeah. So one thing I did before the earnings call was I gathered up many of the earnings estimates from a number of what I would call retail analysts.
Okay.
And I created a little competition.
Yes.
To see who the best retail analyst was.
All right.
So I'd like to make the official announcement on their show.
All right.
Who the winner is. Okay. And I'm awarding the Golden Crown for Q2 2024 to James Catt.
Again.
Yeah. His estimates, and I'm using 20 different metrics.
Okay.
I don't care about how close you were to earnings per share.
Yeah.
Right. That might have been a lucky guess.
Right.
I want to look at how close you are to, I'll show you in a second the details, but sure. 20 different metrics.
Got it. Yeah.
And on an absolute basis, I don't care whether you're higher or lower. It's just absolutely how close were you.
Yeah.
And on those 20 metrics, on average, he was off by 12%.
Got it. Okay.
So it was a pretty tough quarter for everybody.
Yes. Yes.
Right. And you could argue that maybe being 12% off versus, 15% isn't that different.
Uh-huh. Uh-huh.
But James was first, Troy Teslike in third, and Troy Teslike second, and Farzad in third.
Oh, wow. Even though Farzad was way off on the earnings, he got some of the other stuff right.
Yeah. And I'm joking with Farzad, his prize is a Starbucks gift card made out in some other name.
Yes. That's inside baseball, that one.
Yeah. Instead of Farzad, it's 𝐓𝐿 or something. Yeah. Yeah. For those that don't know, when he goes to Starbucks, he spells his name to them and they always write the wrong name on his cup.
Anyway, yes.
Anyway. And I get that too with my name, Cern.
Oh, sir, I'm sure.
Yeah. I've been called, they write Sir or Con, or I've even had cereal once.
Cereal. There you go.
Yeah. So
it's the accent. It's your accent.
I think so. Yeah. I intend to do this going forward.
Yeah.
And my requirements are, as long as somebody is a non-professional, non-Wall Street, non-fund manager person.
Right.
And if they make their information publicly available.
Right.
Don't want to have to, go through a paywall to get the information. So
Troy almost missed out, though. He didn't report until like a minute before the earnings call.
Yeah, I forget where I found his, but I did have his in time.
Yeah.
It was that morning, I think. I did have quite a bit of time.
It was definitely that morning, yeah.
Yeah. And so here's the gory details. I've got their estimates here on the left side.
Uh-huh.
I've got Tesla's actuals in the middle, and then I've got the variance calculations on the right. And so, for example, the total revenue 𝐏𝐬𝐴T was 0.02% off. Okay.
That helped him.
For energy revenue, 𝐓𝐿SAD was 0.05% off. He was the most
Ah.
accurate on energy revenue.
That helped him.
Larry was the most accurate on services revenue and services costs. So he nailed the services and other business.
Yeah, interesting.
𝐓𝐿SAD nailed energy gross profit. He was the closest, only 1% off.
Hmm.
And he was also the closest on total gross profit.
Hmm.
AJ was the closest on the OPEX.
I see. Okay. All right.
Roy was the closest on income from operations. Okay. And then 𝐏𝐬𝐴T was the closest on earnings, and that helped him with some of the other metrics that brought his
Sure,
absolute
sure.
number down.
Yeah. Yeah.
My point with doing this is I've seen on X a lot of people say, well, I got closest to the earnings per share.
Yeah.
And I think that's great, but you know what? There are lots of other people doing lots of good work too,
Mm-hmm.
worth paying attention to, some of the names on this list.
Yeah.
Right. And so I don't just want to focus on the results of, one person, one number. To me, the EPS is what it is, but there's lots of other really important numbers to look at too.
Right.
Now, we should all put this in context. This is kind of a sideshow. It's not really that important. But as long as these folks are taking the time to put these projections together,
Mm-hmm.
I thought it might be helpful to actually be a little bit structured around it and say, okay, let's look at this objectively, quarter to quarter, and kind of see who is the best.
Yeah.
If 𝐓𝐿SAD consistently gets the energy number right, then maybe we should listen to him a little bit closer
On energy. Yeah.
on energy. And if Larry's the expert on services and other, then let's pay attention to what Larry has to say on that part of the business. Right? Now, maybe that was just a lucky guess this quarter.
Right.
Larry doesn't make guesses. He makes calculated, he's doing calculations. But that's my point with this, is to broaden the focus a little bit, just from one number to a collection of 20 different metrics.
Right. Right. And, and I always like to say this on this channel. When you say it's not a guess, well, it's not a guess because it's based on some amount of data input in order to get to the guess. But in reality, if you own the company and you're sitting across the desk from your CFO, before you push the button at the end of the month, neither one of you know what the results are going to be, because any kind of thing can get in the way that you weren't expecting, or things can just be off a percentage here and a percentage there, and it changes everything. So I've done this, I don't know, for my entire life, made these kind of estimates for my companies. And then all of a sudden you're like, oh my gosh, scrap rate was way higher than I thought it was going to be. Oh, I didn't realize that the accounts receivable was going to impact my free cash flow that much. So you just have all these things that can happen that the insiders, the ones that are closest to it, are going to be wrong on. So for us outsiders, yeah, we've got some raw data to work with, but when it comes to trying to figure out cost of goods, man, that's going to be extremely difficult to be anything more than a guess.
Yeah, no, there's a lot of detail that we just don't know and can't know.
Right.
So they're educated guesses, perhaps, is the best term.
Right.
Yeah. And Larry, I think, is making very educated guesses on a number of things.
Yes.
Yeah. I think I will skip over most of this. This is just looking at the components of revenue.
Oh, okay.
The services and energy business together. Total revenues this quarter approaching 6 billion if you look at the combined businesses.
Wow.
This is the share of the total. So services and other, energy and green, and the regulatory credits now account for about 74% of revenue. I'm sorry, 26% of revenue.
26% of revenue. Okay. Okay.
Yeah.
Okay.
I'm thinking far ahead, Randy, in the future.
Okay.
Yeah. But as a share of profit, it's much higher.
Yes. Yeah.
Right. Now, that's because the reg credits basically have zero cost associated with them.
Exactly.
Right. Here's gross margins. I think this has been discussed, but energy gross margins, solid. auto gross margins, excluding regulatory credits, still headed down a little bit. And services and other coming back up after a little dip here. And then, as I always like to end, here's a Cybertruck photo. This time it's from the Irvine Police Force, and they're announcing coming soon a police Cybertruck.
Yeah.
Which makes a lot of sense, in my opinion, for police forces to use this vehicle.
Yeah, it's hard for me to imagine why they wouldn't just all switch.
Yeah.
Or that and the Model 3 performance. I mean, those two, between those two, it would seem like they could pretty much cover everything.
Yeah, I think we will see that over time for sure. I think they'll discover that this vehicle is a very high performance vehicle. And also, perhaps the Foundation series isn't the best one for them to buy.
No, probably not.
Right, but eventually,
Irvine's pretty rich.
I guess so. Cost is no object.
Right.
Yeah. Anyway, that brings to a conclusion the slides today. I hope that I've given everybody a little bit different perspective on Tesla, away from just the margin story and delivery story.
Yeah, it is much more than the sum of its parts.
Yeah.
But at the end of the day, you started off with the truth, which is what Elon has been saying and will continue to say, I'm sure, that when all is said and done, and we have the Optimus robot out there, the rest will be rounding errors. Even Robotaxi will be a rounding error compared to the Optimus revenues and profits, which will just be off the charts. But having said that, a $400 billion energy business, or a $300 billion automotive business, or a $200 billion semi-truck business is nothing to sneeze at.
Right.
And the robotaxi business with, estimated $7 trillion valuation, that's certainly nothing to sneeze at. It's just that Optimus will be bigger.
Yeah, I think it's kind of like Amazon. If you look at Amazon, started out selling books and then layered in other products that they sold.
Right.
When they started AWS, it wasn't like they just, stopped selling books or didn't care about selling more books.
Right.
They kept pushing on that too.
Yep.
But over time, that just matters less and less. In the case of Apple, iPod sales eventually kind of went away.
Yeah.
Right. That was replaced.
Right.
Now, in Tesla's case, selling vehicles to you and I may eventually go away.
Mm-hmm. Mm-hmm.
Right. But that's probably a little ways down the line.
Yeah.
From a profit maximization standpoint, at some point, it does make sense for Tesla to stop selling vehicles. I'm not suggesting it's going to happen anytime soon.
Yeah. I think, I've noodled that back and forth in my head so many darn times. I think there's going to be a percentage, even in, say, the 2030s, there's still going to be a percentage of the population that will want their own vehicle for a variety of reasons. I use the mother, a mom, as the example, who's not going to want to be always shifting those child seats and all the rest of the paraphernalia that she's got to carry around everywhere with her. It's just going to be too much of a hassle to be doing that with a robo vehicle all the time, in my silly opinion. Salesmen, there's some other categories like that. Some kinds of workers who come to your house, or go to a business and do, on-job repairs and whatnot. They'll want their truck outfitted exactly the way they want it outfitted. So there's a bunch of those categories. Now, whether Tesla continues in those smaller businesses, those niche businesses, that's even yet another question.
I have an easy solution for the car seat issue for kids.
All right. Okay.
Kids love those ball pits with the colorful balls.
Yeah.
Just fill the vehicle with those.
I see. That's got to be it. I'm sure, Elon, if you're listening, write that one down.
That goes in the category of cheap ideas.
Cheap ideas. I think we should end the video right now, because you're not going to be able to do better than that. I
think you probably should have ended it just before I said that.
Thank you, Cern Basher, as always, for coming on and regaling us with charts and graphs. I mean, that's pretty special when somebody has a talent to regale with charts and graphs. Until next time, it has been great talking to you all.
Thanks, Randy.